Good day. Ira Epstein of Linn Associates with your financial market wrap-up for this Tuesday, the 26th of February, 2019. We're about 5 minutes to the close, and as you can see, the markets are mostly in the red at this hour. While you're in the green in many of the metals, you basically, at the end of the day, closed a little bit lower than this. You'll see that when the settlements fit in. Where we've seen the problem is in the dollar index. Looks to us like it's broken out to the downside here. And as you take a look, most currencies are up against the dollar today. As we step over to the notes and bonds, if you were listening to Fed Chair Powell this morning, he's still very much in the camp that no reason to raise interest rates in the immediate future. He didn't get asked the questions I wanted asked on the roll-off of the Fed balance sheet, but maybe we'll see more of that tomorrow because it is a two-day testimony. It used to be called Humphrey Hawkins, no longer is called that. At the end of the day, the API numbers came out and they were friendly on all these different levels, so that was a surprise to the market. We'll see how the EIA comes in the morning, and the grain market's still quite ugly, nothing picking up there. So when you look at the S&P, right now for the week, the market's down a point. So it's not done much of anything. First 2 days of the week, pretty stable, if anything, there. You can see how this whole rally has carried up into what I consider these important resistance areas. So past highs that you failed at, we are in the neighborhood of. Does it mean you have to go down? Nothing means anything like that. But you do pay attention because past resistance held the market up, and we suddenly got very quiet in trading. I don't know if you've been paying attention, but today it was like watching paint dry in the market. And there's a lot going on. You've got Michael Cohen testimony coming up now. 3 days of that, 1 day in public. I think that's Wednesday, if I'm correct. You've got Mr. Powell, the Fed chair, he's been speaking. You've got the president in Vietnam. You wouldn't know it. The press is giving it absolutely no coverage at all. And of course, where the coverage is going this afternoon is in the House vote to, if you will, vote against the president's national emergency declaration to overturn it. So as we look at the market, at least the way that I view swing lines, and this is the same chart, and this is with the swing line on it. The last break low, the way that the swing line sets it up, came in at 27.70.50. If that number were to be taken out, what it would do is it would change the pattern of one that we've had in place in all reality here since Christmas Eve. And the market has had one of higher lows, higher highs. It's very unusual for that to stay this long. If the market breaks through that, the next support zone, if it fell, could be the 18-day moving average or even 26, let's call it 88, the 100-day moving average. As for the resistance above the market, as I see it, it's the upper Bollinger Band. If you can look right here, this gray line's the 200-day moving average, which coincides very close now with where the 18-day average is. As I pointed out yesterday, if you look at this 18-day average, yesterday's number was 27.40, the day before 27.32, then 27.23. So it's narrowing in, but it's now, because the market has gone sideways, what's happening is it's losing this data. It's not getting spike up data. So each day it's adding some points, but not as much as it was prior to that because the slope of the ascent isn't there. I think that you'll find tomorrow that the 18-day average is probably close to 27.52, and you're going to be in that 200-day still around this general number of 27.57, but it's a support zone. What you want to look for is when and if the momentum, the red line that makes up the slow stochastic, it's called a D line, closes under 80. If that occurs, it spells that price and these key averages right here want to come together. Until that occurs, you still get these situations where markets pull back and the buyers are showing up. In the NASDAQ, you still have the embedded reading. You can see the formidable resistance of the 200-day average coupled with the upper Bollinger Band. That is stopping this market right now. When I look at the Dow, it's unlike the S&P setup, got the 18-day over the 200. So the first support, if it were to break, gets down here. I keep saying if these markets will break. Again, it's all going to be, in my opinion, up to what the slow stochastics do. If they start losing momentum, because momentum often leads price, then I'd be looking for it. What am I looking for now? Right now, I'm still saying that the pullbacks in these markets are being bought by the pros because the momentum hasn't been lost on them. Now, the market that's starting to show the first problem is the Russell. Notice how, first off, like the NASDAQ, it got to the 200-day in the upper Bollinger Band, stopped the rally. But notice how the red line is now starting to drop away. Looks very different than it does in the Dow, the NASDAQ, or the S&P. If that drops away and gets under on the reopen tonight, 80, could be the first sign that price wants to pull back to that 18-day average, and you've already got that signal in the VIX. The VIX lost its embedded reading, not last night, but today, and look at that 18-day average, went literally right up to it and stalled against it. That is still the objective, 1536, today's high, 1528. In T-bonds, momentum is still pointing up, the bias is up, and the market got to the point today where the high exceeded a previous high. So you've got an uptrend of higher lows, higher highs, a target of 147.6 is the number as I'm reading it. Very tight trading range. Whenever you get these tight trading ranges like this, get ready. There's going to be an event that moves the market sharply away from it one way or the other. And that's what we'll all be looking for. The same in the 10-year notes. Higher lows, higher highs, momentum up, bias up, resistance 122.15. In TLT, the popular ETF for interest rates, you have the lower highs but higher lows. So you're narrowing in now like that in the market. Momentum's gone flat on you against the 18-day average of closes. If you rally, the supports, the resistance, 122.59. If you don't take out 121.95 and take out the 120.92, the lower Bollinger Band comes into play. In the dollar index, I think it threw in the towel. I'm looking at lower highs, lower lows. Admittedly, you're oversold down here. I don't know that you'll get a lot of aggressive selling. But last night we were looking at this pattern, and I'm sure I would have said trend down, bias down because you closed just under the 18-day average, momentum down. Next downside target could be the 100-day average. That's exactly where you went. Because you're oversold, I don't know if you're going to be able to get to that lower Bollinger Band just yet. But what I do expect is play near the 18-day average with a bearish bias into the market now. Eurocurrency's the flip-flop. It's turning friendly. Higher lows, higher highs, support back at the 18-day average. I wouldn't want to see 133, 36 taken out. I believe that's what that number is, my eyesight. Yeah, 113.36 taken out. That would break the pattern. But right now, I would expect pros or buyers on breaks. And if you'll notice, you're not in overbought territory. You don't have readings over 70. In the British pound, difficult one to call. But when Miss May today basically threw in the towel and gave them everyone a choice of, for the first time, extending the Brexit date, the market took off to the upside. That was that part of it. You'd been in an uptrend and you just extended past the Bollinger Band today. We'll see what it does next. Japanese yen today decided to end this leg of the downtrend. You have a lower low, now a higher high, the lost embedding reading. With that lost embedded reading, you put into play the 18-day average of closes at 90.89 is a potential upside target. Bitcoin, as I said, losing its momentum. Could be the market wants to retrace to the 18-day average of closes to regroup. It's been a nice rally from the 31.80 level up here to $4,000 for all purposes, so a pullback wouldn't be a surprise. Brent versus WTI crude, as I told you, the API number came out just a moment ago and looked pretty good. The market is not in a trend, however. Brent has got a higher high, lower low, support the 18-day average, resistance the 100-day, and momentum pointing down. The market stepped out of its trend. Brent, because you've lost the embedded reading, I was looking for the 18-day average. It all happened at one day. So not much you can do with that type of trade. In the rebob, you lost the embedded reading 2 days in a row. Rallies in this market, I would say, are going to get sold by the pros as they try to drive the market back to the 18-day average of closes. You are not in a trend. You have a higher high, lower low pattern, and momentum is pointing down. And last in the nat gas, if you knew nothing else, here's the market 2 days ago, Friday. First resistance, 100-day average, second Bollinger Band. You played with it, and today you gave back a little bit there. But that's how resistance points are determined in part. You know, you're looking for those to show up. I discuss this and a heck of a lot more in my market research. Now let me just tell you what I do. Twice a day I write a newsletter, and that's Monday through Thursday for my subscribers. I start actually on Sunday night so that as the markets open up, they get something to work with. And then full subscribers to my research, and this is where they get the whole 9 yards, they also get my morning subscriber video that we talk about so often here. What that video does is it reinforces what I say on the 40 charts, but what it doesn't do in the video is give you what I'm writing about and bring you up to date on so many events. Think of me as a source that's reading all day long, be it CNBC, Reuters, Bloomberg, MSNBC, Market Watch. I can go on and on. I mean, I spend my day glancing. I've taught myself over the years how to not spend all day doing that and bring out the important points that I think are going to affect the next day's trade. If you haven't tried this, do so. It's a free trial. Give us a call. Go to our website. We'll include with it our mobile application. If you want to try our different charting platforms, we'll do that too. You can also click up right there. If you see me on YouTube, go to our carousel page. It'll take you right there, and away you sign up. I'm Ira Epstein. You have a good day. I'll talk to you all tomorrow.